Hey guys, what's going on? I just did a full video that you guys couldn't hear the audio, so I'm redoing it. But this is a new series I'm calling A Week Ahead. I want to give you my take on what I think is going to happen in the week ahead, possible scenarios for the market going up, going down, and how I plan on playing it. So if you like it, give me a thumbs up, subscribe, and I'll keep doing videos like this. So let's get into it. All right, so what we're looking at here is just a continuous chart of the micros, just because I have a lot going on my traditional charts, which is the minis. So what we see here is this is the start to January, some nice sell-off, but we had a really strong December. We had a really strong November. And really, like, it makes sense. Everyone kind of expects us to go and take out these highs. And arguably, I would be on the same side as them. But anyone that watches the stock market knows that when you start to get a lot of buying here, you're going to get that paired with the sell off. So, this is actually healthy to me. I think there's still some nice, healthy room to the downside for us to then rally to make all time highs and then probably sell off a little bit because we don't need to be roaring yet in the market. But on a weekly level, you can see here had some nice movement and to the downside, but we did get a nice bounce in the NQs, kind of right around some previous support areas. So let me just draw that. You've got this high kind of in this range, so it makes sense that we would bounce here. And so what you're saying is on a weekly level, everything was healthy. I mean, I was calling a top in Apple on December 13th, and I was pretty close to that, calling the exact top as far as the day is concerned. But happy to start, for me, my long-term portfolio, selling some upside calls, collecting some premium, and actually taking a piece off, expecting Apple to be hitting the 170s before we bounce. So my target's right around 177, 178, and I'm expecting us to continue to drop. We'll get into the Apple chart in a bit, but I think, well, let me get into that a little bit because I think that's important. So what do I mean? I think, like, to be a great trader, you have to be willing to try to call bottoms and tops, and not so much like a retail, like this is the only time I'm trading, but as if to say, like, when does the market feel frothy? When do you feel like you want to just go in? And I'm just going to get a chart loaded here for you guys to kind of show you what I'm talking about. But when do you want to go in and try to call? Like, hey, for me, it was mid-December. The market just continued to rally for the rest of the year, but Apple just kind of was making that signature for why I thought the top was in. And what do I mean by signature? I feel that if you have a handful of stocks, and I'm a NASDAQ futures trader, so for me, if I watch Apple, Amazon, Meta, Netflix, Tesla, Google, Nvidia, Microsoft, I've got a pretty good idea what the market's going to do in the NASDAQ futures. And I have some of those as my primary holdings in my long-term portfolios, my retirement accounts. And for me, there's some signatures within some of these stocks that tell me, okay, I think this could be kind of a temporary top. And I'm going to start to kind of sell upside calls, collect in some premium. If I get pushed out, it's a good reason to sell. I think a lot of people in the long-term portfolio don't realize you can sell and go to cash, and that might be the best thing. At the end of 2018, I went to cash. The market just felt like it needed a good sell-off, and then by January, I was getting back in. And if my memory serves me right, I think it was maybe even earlier October that I was starting to get out and avoid maybe a 5-10% correction, and then when things looked healthy again, get back in. And equivalent, instead of maybe making money, I'm getting the ability to purchase more shares with the same amount of money. So that's something to think about. If you can't separate your long-term portfolio from your short-term, you're going to have problems. if you're long and you're always like, oh, I got to be long. My retirement account's long, so I want the market to go up. If you can't play both sides, you should not be a futures trader at all. Should not touch it. Maybe you can ride a trending day up or down. That's great, but the mental side of trading is so important. So if you have a bias and you're bringing that into certain products you're trading, it's gonna be a problem. So, just getting back to this chart. Now, this chart's got a few more markings on it. Again, it's the weekly continuous NQ, but you can see we came pretty much down to the week of this. Down to the tick of this weekly fair value gap. And so you can see we've basically corrected the month of December and the Santa Claus rally, which is fine. In tech, which the NASDAQ is tech, you're going to have to understand that there's going to be rotation. People are going to harvest winners and not assume that every sector and industry is going to, year after year be the best. Now, personally, I'm very heavy tech in my retirement accounts. Full disclosure, very important. I am not giving you financial advice. I'm not a financial advisor. I don't want to hear anybody telling me, well, you told me you need to buy this and that. No, that's not what I'm here to do. I'm trying to provide you guys with my thoughts on the week ahead, try to organize my thoughts and give you guys scenarios of where I think this can play out. So on a weekly level, I think this is totally healthy. Just to draw, again, some boxes here. Coming back into this range makes a ton of sense to me. But, I'll let the market dictate that. So for a scenario, we might want to do kind of a fake out up, but I think we're going to maybe hover around here into the CPI print. And these lines that I'm making are not, this is kind of across the whole month because this is a weekly chart, but let's just kind of look at it on a daily basis, and it might kind of give you some ideas. We had this strong move. So for me, maybe we continue up and then we could come back down into the week here and let the CPI. And the CPI, I could see us coming up here on the CPI print or having a nice flush down into this zone. And I think there's another zone lower that, again, is healthy. This chart, people might be worried about this sell-off, but again, for me, let's be realistic. I mean, this is a classic Santa Claus rally, and the smart thing to do would be eventually fade that move. So I'm prepared to fade that move some more if the stocks and everybody wants to tell me that, but we'll just let the market dictate where this might go. So that is the NQs. Let's look at the kind of more important one because this gives you a better look at the sectors. And we'll just drop back out into the monthly view quickly. And this is not the stock. Sometimes that happens. You got to be paying attention here. But again, a little bit more muted of a drop here. We're kind of in the halfway point of the previous month's range. So could we continue down to this lower end? Sure. But we're right kind of where we want to be potentially for the move higher. You never usually go right to that all-time high. Makes sense that there'd be a little bit of a sell-off here. So cleared some stops here. You could see us maybe we open Monday, Tuesday, come up, clear these highs, come back down, have a little bit healthier of a pullback, and then we make a move to the all-time highs. Regardless, though, looking on the weekly level, the fair value gap, you can see ES is actually stronger, which makes sense. Again, tech was weak, leading the weakness, I should say, last week. So looking at it for the week ahead, has that selling been overdone? Has the selling been taken care of? Or do we still have some more to go? So we'll continue to look at it. But for me, there's nothing unhealthy about this. Plenty of room to the downside. And in ES, another 20, 30, 40, 50 points, and I think in the other direction. So you have to be willing to go into this week accepting short and long plays. Let's jump into kind of the key stocks for me that I watch. Apple, obviously ugly week. We had a downgrade at the beginning of the week, and now we're bottoming up. I have a target that we kind of come into this fair value gap. But really for me, I consider trading like a boxing match. And, when you're in the ring with somebody, you get used to their tendencies. You get used to, the jab, the hook. You really kind of fight with this. So for me, if you look at Apple, their tops are really kind of obvious. So what I looked for, this one got me. I was expecting us back in 2022, this summer move, to just go ahead and make new highs, and I got caught in it. But what I did was I learned a lesson. Okay. And if you don't learn anything when you take your losses, those are the best times to take your losses, to take your lumps, and to say, what was the lesson here? And so for me, what I find is when the top kind of is in, there's an inside bar, usually right before the sell-off. Okay, let's see if I can go back a little bit more. This doesn't necessarily look like an inside bar, but these are kind of inside bars on this one. More of a rounded, but we're going back years here. And so on this one, you can kind of see more inside. So here, I felt like this was a really strong day. I took an opportunity to sell upside premium. And when I saw these dojis, I felt really confident that this was going to kind of begin to be the top in Apple, because everyone thinks we're going to, hey, look how close we got to 200. We got within pretty much a $0.50 and, 38 cents. Well, that's not how the market goes. It likes to find suckers. So everyone's playing the long, classic bull trap. And then we get the nice, anyone in here is thinking the same thing I was. And the nice thing about analysts is they can come out with a report and say, hey, guess what, guys? We're going to downgrade, downgrade. It didn't seem to bother anybody with the Apple Watch news in December, but then all of a sudden now you get a downgrade and get this strong movement. But to me, I'm very long-term bullish in this stock, but I am happy and I will feel lucky to be buying in the 170s. High 170s, no problem. And if I get back into buying in the 150s, I'm going to load up like I'm trying to buy everything in the store. So you can see, again, I'm a big proponent of these fair value gaps. And look at this little one, just well-respected, very thin fair value gap, but was respected, the sell-off. So, I was kind of shorting here, but you could be by December 21st kind of, hey, this is time to get out or sell some upside calls on your longer term portfolios. Pretty ugly looking chart. Wouldn't be trying to call the bottom here, but if I see some positivity and everything else in the market showing strength, that would be a good indicator that Apple could kind of give us a nice little punch boost, if you will, back to the upside. Just pulling up some other ones. You see some more ugliness, but obviously more relative strength to Apple. You can almost say we are bottoming here in these fair value gap areas. Is there still downside movement back to the 140 level? Sure, I think I'd be a big buyer here. I actually like this stock a lot more to the upside. I think, they were quite a prevalent company that benefited from COVID over the last few years, was beaten down again in 2022, and plenty of room to the upside. That whole number of 200, I think, is a play for this stock. It's just a big-time company, and I think they're going to have another strong year this year. So that is Amazon. Now, Meta was really strong. I mean, look at this. They're already getting that bounce. So a week ahead, right? Like, what am I thinking a week ahead? Meta last week was starting to already curl around. If I see continued strength in Meta and then Amazon showing some strength, and then it's like, hey, even Apple's getting in on the party, those are things that are telling me I want to have maybe more of a long bias. So some nice movement on the daily chart there for Meta. I was quite happy for it. Tesla even, again, kind of sucking people back in, thinking we're going to move here. This is from the earnings drop. We did have a nice movement here. We have a genuine gap down here. So realistically, there's obviously a ton of upside in this stock for how heavily it's traded. But for me, I don't really trade Tesla. I just keep an eye on it. The mighty Google. What are you searching for? Again, there's another nice small fair value gap kind of indicating some sell-off, but you can see this is more muted in my opinion, and this would be one of those ones I'd be looking more early on for some move up. It just really hasn't sold off, so definitely has some relative strength there. Softy, I mean, what sell-off? I mean, if this isn't a classic range, I don't know what is. Let's just drop back here so you can kind of get some reference. So, this is perfect range level. I don't think you do anything to this until you see some breakout above or below that range. Some of the other ones here, mighty NVIDIA. Now, NVIDIA has been flirting with this 500. Obviously, that's a whole number. The stock's been, parabolic, absolutely destroying it. AI, everyone needs an NVIDIA chip, which is great. But that's some strong movement there already coming in from last week. So continue to watch NVIDIA. And then you kind of want to, look at some of these oil and gas. You didn't see... this is Occidental Petroleum. But you really just want to maybe go through the sectors and for yourself and get an idea for it. For me, we're really at a healthy point. We're really where we were for the last CPI print. So it makes a lot of sense. And really, let's just kind of say, like for me, the week ahead is pretty simple. I'm just going to kind of focus on what the market wants to tell me, use my levels. So again, if you guys want to get my levels here, let's go back. And I'll maybe drop into an hourly chart so you can kind of see, and this will all get screwed up. Oh, it's going to be perfect. So for me, you're getting respect of this former fair value gap high. You have nice respect from this fair value gap here, coinciding with another weekly fair value gap. So for me, I have some obvious goalposts in mind, obvious opportunity up higher and to the lower. So the key here, guys, is let the market play out. Don't try to get in first shake Monday. Hey, see what the overnight is tomorrow and try to understand how the overnight affects opening ranges, how the overnight affects things, and use the data you have to make the best decision you can. Look at the ticks, look at the advanced decline lines, look at the performance of individual stocks, and try to get an idea of where the market's going to go. So for me, thank you for watching my first week ahead video. Hopefully you guys enjoyed it and I can do it again.